Hey, crypto traders. So, if you don't know me, I'm Ryan Wilday, the lead analyst at Elliott Wave Trader, a site founded by Avi Gilbert, known for most as the one of the key authorities on the Elliott Wave theory. And I was taught the theory by him as a member, and was asked to lead the crypto service in August 2017. Here I am, very late. A bear market has come and potentially gone, and here I am finally getting around to experimenting with YouTube and potentially doing a weekly drop if this goes well. And here's the first episode, if you will. What I'm going to share with you today is my feeling of the Bitcoin market, this rally that we've had off the December low, and where I see us potentially going as this rolls along. Before I get into market action, I just want to say real quickly that I watch sentiment very closely, and I think every investor should. And one note I have to make is that currently the market really, sentiment-wise, if you look at YouTube, Twitter, all of that, you see a big marked turn to bullishness. Well, we have to note that at the bull market high in 2017, before the crash, we had a really intense euphoric bullish sentiment that really downturned the market. We have to be cautious of that here too. Now, I'm going to say very clearly, price action wise, which I trade mainly, leads me to be bullish. However, I believe we are really in a deep need of a pullback to scare some out of this market. So we'll talk a bit about that, but that's not necessarily going to change my bullish view unless real support is taken as well. So we'll talk about that. Now let's look real quick from an Elliott Wave perspective. I'm looking through Motive Wave software, which I use for the Elliott Wave part of my work, and we have what best is defined as a three-wave rally. If you know Elliott Wave, we look for a five-wave rally to start a bullish trend. Now there are forms that can start as a three-wave. After the Mt. Gox hack and bear market, the market rallied out of a three-wave start, and that was what's called a diagonal. It can happen here as well. But also sometimes if we have a three-wave rally that doesn't hold support for that fourth and fifth, you can get a breakdown in what's called a B-wave top, or you see it kind of you see the market chop for a while, perhaps in a triangle. A lot of things happen with three-wave rallies, so they just bring more caution from the Elliott Wave perspective. So that's sort of the framework. That's the framework that I'm under. If you've read my articles, you know that even if we went much lower, down into the 1600 level, I am looking for a long-term top from 65,000 to 125,000. Some people say I'm nuts, although I wouldn't be the only one out there looking for those levels. But the question is when. It really depends on the price action we have here. If this 3,000 holds, then we are on our way. But if it breaks down, that we have a very much delayed potential for that to come to be. So that's my overall long-term outlook. The question is when. All right, so you know where I stand. Now let's look at some of the technical action here. On the weekly chart, I'm going to move over to TradingView. I want to point out something about the long-term chart that is really encouraging right now. If you look at our Mt. Gox top prior to 2014, look at the RSI, and you can see how the RSI was hanging out on the weekly at a really high range, really not going below 50, and pushing even as high as over 100, which I don't know if I've ever noted an RSI that high, but I'm sure it exists. That's just very, very high on a weekly chart. Now, as the Mt. Gox hack occurred and the top came in, you can watch RSI start to really sink and eventually hit a low sub 30 on the weekly. And then as the bottom came in, we can see the RSI climbed. And then once the bull market, this is what I call third wave from late 2015 into the end of 2017, look at the RSI on the weekly and how it could not breach roughly the 50 level, at least sustained. And then again, eventually we saw the same thing happen like we did in the previous bear. It sunk. And now look at where we're at. And if you saw a recent tweet of me, I put a circle around and stars. I mean, that is a big deal with this RSI on the weekly coming out up and over 70, which indicates a lot of strength in this market. I mean, it's obvious strength in this market. Nobody's missing that. But this RSI pushing over is an indication of a big trend change, as long as it now can sustain its strength. And so just like previously where the weekly was holding over 50, I'd like to see the same thing here, even on any pullbacks that we have along the way, which we need a pullback. We need a healthy pullback to keep this market fresh. Well, I'm just looking at my prices here. I was going to share potential that we saw a breakout, and so I guess all of my news and is I'm just looking at prices up at the top, and I guess all that I'm going to share with you is kind of late now, but we'll talk about where I expect this going now that we're getting a little breakout here. All right, so that's the weekly view. If we go to the daily real quick, now I'm going to be a little bit urgent getting to the hourly because it's going to be pretty interesting. If we look at the daily, the RSI, follows again a high range during a bull market, a low range during a bear market. That's obvious. Where in the bull market a hit of 30 was tend to be a buy signal. Now, on the bear market it's flipped to where you really want to sell the 70 and not buy on the 30, and then eventually we hit the low. Well, now we have another strong RSI coming in, and in fact we have a hard time getting below 50 on the daily, which is interesting where the daily tends to range. So this really shows how strong this market is from a trending perspective. So again, a pullback should happen. I would say now is the time you can buy a 30 RSI, which doesn't work during a bear market. As long as that weekly stays over 50, the RSI remains in the 30 region on the daily, that's a great time to buy. So it's something you can watch for going forward. That said, we have no sign of pullback yet. Okay. Now I'm going to go down to the hourly real quick. Let's see. Unfortunately, I'm on my third take of this YouTube video, and I was going to talk about how cyclically, and it's funny, cyclically this market was looking like it was going to break out. And I'll just tell you real quick, my expectation, I had a recent tweet, is that if we did this, then we would probably see a run to 10,000, and I think that's what's likely now. I have a marked ABC here because I see this as the leg of a diagonal, with this being 1, 2, 3, 4, 5. If you look at my motive wave, it's traced out here in orange. So orange is a color I use when I have an alternate view, which means I would have rather have seen the third wave top, and now I've got to move this 3 up to the top of that. So let's just do that now. Whoops. All right, so I'm doing this live, an adjustment of my Elliott Wave count, which sometimes is needed when price action on a smaller time frame doesn't mind my roadmap on the bigger time frame. So right now I'm looking at 10K. There is potential for a B wave top in this zone in the 9,000 region now, but we'll be watching that closely. If the 9,000 region can't top it, then we'll be seeing a push into the 10,000 region. So pretty amazing. I wish I didn't have to take several takes because I saw this potentially coming. You can see actually the price action we got. Again, I use RSI in a sort of a different way, sign of strength. But this morning when I did some of my earlier takes, we had a breakdown of below this range here, and then we had RSI come right back up, and now we're seeing RSI break out. So this is showing a strong trending breakout right now, which as long as it stays, I would not want to see us breach back under 7,900. Then I see this going further. So that's the first level of support, and then we'll see more support form off of this these candles as they developed. If we do get below 79, 77 now, we have a false breakout in the most clearest interpretation in my view. All right. Wow, that happened fast. That's great. All right, so that's what I'm looking for. When I look at the look at the 5-minute, you can see that we were chopping in this range. If we actually pull this up higher, we actually didn't see much of a retrace. Only 382 actually on the money of this move we had into the A wave, which is quite shallow. We just had sideways action all weekend. This was a lot of scalping opportunities to a degree, not big skew, but at least a little bit of scalping. But here we have with a return to volatility in front of us. So anyway, so that's the way I see the market. Again, from just a bottom line standpoint, I see us coming into 10K, but we'll have some resistance at 93, which could signal a high B wave from an Elliott Wave perspective, and that could pull us back to the 6,000 region. And as long as this market right now remains over 6,000, I see us most likely getting that fifth wave rally and a strong indication that a new bull market is born. And then, I look forward to the chance that we may be slowly grinding up towards 65,000. But that just, those crazy moon targets are nothing as long as price action doesn't sort of mine supports on the hourly and 2 hourly charts. So that's often the way I'm going to operate with these updates, is really focus. We'll look at the bull market, we'll look at the daily, we'll look at the weekly, how are they doing, and then start to focus in on some of the short-term price action. If you want to follow me more consistently, I must post about 30 charts a day on Elliott Wave Trader. Free trials are available if you go to the site. Otherwise, I look forward to hearing from you, your feedback and likes if you're so inclined here on YouTube on a weekly basis. So thanks again. Glad to do my first one. We'll see how this goes. Talk to you soon.